Today, Changpeng Zhao steps down as chairman of Binance's U.S. affiliates board. Formula One and MLB get hit with new multi-billion-dollar lawsuits over FTX. And Vanderbilt Law School professor Yesha Yadav weighs in on what's next for crypto following Binance's settlement with U.S. government officials. Welcome to CNBC's Crypto World. I'm Talia Kaplan. Crypto prices are mixed this morning. As of noon Eastern, Bitcoin dropped slightly, trading around $37,800. Ether fell more than 1.5%, but still traded above the $2,000 mark. Solana, however, climbed more than 3.5%, trading around $59. Okay, let's talk about the top stories. Binance founder Changpeng Zhao is stepping down as chairman of the crypto exchange's U.S. affiliates board. In a post on X yesterday, Binance US said that it is not a part of last week's multi-billion-dollar settlement between Binance and U.S. regulators and law enforcement entities. Binance US added that it does not have any outstanding enforcement matters with the DOJ, CFTC, and the U.S. Treasury Department's financial watchdogs, stressing that it remains fully operational. The post went on to note that CZ, who, as of last week, is no longer the CEO of Binance, also decided to step down from his role as chairman of the U.S. affiliates board of directors and will transfer his voting rights to a proxy. CoinDesk is reporting that a senior Treasury official said that Binance US was not part of last week's settlement as it was a registered business. However, the U.S. affiliate is still facing an SEC enforcement action over the offering of what the agency believes are unregistered securities. That case also includes CZ and Binance. Last, Formula One and Major League Baseball just got sued for promoting FTX, and Cristiano Ronaldo got hit with a lawsuit for endorsing Binance last year. 4 new class action lawsuits were filed in Florida this week by the Moskowitz law firm. In a statement sent to us, a spokesperson for the law firm argues that the global organizations all decided to promote crypto companies such as FTX and Binance in exchange for millions of dollars and to fill seats in arenas that were abandoned by the coronavirus. Soccer star Cristiano Ronaldo is the defendant in one of the lawsuits that seeks more than $1 billion for his alleged involvement in the offer and sale of unregistered securities in coordination with Binance. Last year, Ronaldo partnered with Binance, where his fans were offered an exclusive NFT collection. Also included in the array of lawsuits are the firms that helped boost FTX's brand. All right, turning to crypto regulation for our main story. House Financial Services Committee Vice Chair French Hill, who's also the chair of the Digital Assets Subcommittee, joined CNBC Squawk Box this morning to discuss where regulation stands right now and slammed the SEC's approach of regulation by enforcement.
I think the SEC has been asleep at the switch when you look at FTX particularly. No, they are, but they don't have the tools to use, and I think Gary Gensler has done a very bad job as chairman on this topic by not coming to Congress, following the president's guidance, actually, in his executive order, asking for a regulatory framework that has a legislative background. I don't think you can solve this by trying to cram the crypto and digital assets infrastructure and ecosystem into the existing laws, and that's what Gary Gensler has tried to do. I think he's failed at it, and that's why I think it's come to a head that Congress needs to act here, both on stable coins and in the general regulatory framework for innovation in this country.
Representative Hill pointed to 2 bills dealing with crypto: the stablecoin bill, which passed out of the House Financial Services Committee with bipartisan support, and the Fit for the 21st Century Act, which establishes a digital asset framework. In July, the House Financial Services Committee passed the bill, and the House Committee on Agriculture approved it. This afternoon, I spoke with Vanderbilt Law School professor Yesha Yadav about the regulatory developments here in the U.S. We also discussed the Binance settlement. Take a listen. I want to start off with your reaction to Representative Hill's comments on Squawk Box this morning, where he argued that the SEC's current approach of regulating crypto by, quote, trying to cram the digital assets, infrastructure, and ecosystem into existing laws just doesn't work. You actually wrote a research paper this year on regulation by enforcement. So I'm wondering, what do you think about Representative Hill's argument?
You know, crypto has been this incredible challenge for regulators to make sense of. This has been from the very start where there's been continuous arguments about whether this thing is a security, whether it's a commodity, that has meant that we're not even getting to a first base with respect to having rulemaking that can provide some kind of roadmap for the industry, and perhaps more than anything, to start protecting customers. The biggest vulnerability that we're dealing with here is that customers are exposed. There are billions in assets in different crypto custodians' vaults. These assets, there's no real regulatory framework to address how to keep them safe, to keep them remote from bankruptcy. The consequences of that lack of action has become incredibly apparent over this last year, when the multiple bankruptcies affecting Celsius, FTX, Voyager, and others have left customers in the hole, wondering whether or not their assets are safe, and for many, ending up as unsecured creditors, for example, in the case of Celsius, and therefore last in line, essentially, to get paid out. So what we need here are rulemaking. Now, of course, agencies have a ton of discretion, as I wrote about in that paper alongside Chris Brummer and David Zering, have a ton of discretion as to how they engage their mandate and carry out their duties. They can take enforcement actions, they can do rulemaking. The question is for them to use all of this regulatory power that they have in a way that can be effective, get customers protected, provide market integrity, stability. And so the SEC, CFTC, and others have a bunch of power to do that. The question is, just getting to that first base, getting everyone's heads together, or, asking Congress to really get serious about putting some kind of bill together that can move the dial forward here. We're really falling behind. And unfortunately, the cost here is being borne by customers most of all, and the savings that they put in line in the crypto markets.
We'll talk more about crypto regulation in just a bit, but I want to turn to other major news, that settlement between Binance, the world's largest crypto exchange, and U.S. government officials. What was your immediate reaction to that historic settlement by the U.S. Department of Justice and the fact that Binance's CEO pled guilty to violating the Bank Secrecy Act?
Talia, it was a pretty seismic settlement on many levels. I mean, firstly, it came as a surprise, I think, that CZ would plead guilty. But then again, perhaps not, given everything that we have seen with Sam Bankman-Fried and the potential decades that he's looking at following his conviction last month. And so, it did come as a surprise, but this settlement is extremely significant on a number of levels. I mean, firstly, for Binance itself, it's a pretty hefty fine. The biggest thing here is this monitorship that the U.S. has put in place. Now, what this means essentially is a complete sea change in how Binance has been run over this last sort of 2017 onwards since its creation. It has been very, very explicitly this borderless exchange where famously, CZ has said that wherever his office is where the exchange is. This has been an exchange that has run in accordance with his personality as the animating force. The governance in Binance has been notoriously opaque. And all of that is about to change in a really big way. This monitorship means that Binance's affairs will be very closely scrutinized going forward. This whole notion of this borderless exchange without a primary regulator is certainly going to change going forward. This monitor will have eyes on everything that Binance is doing. Most likely it will have to pick a headquarters now. And the way in which it's going to be run is not going to involve CZ anymore in any significant way. So the entire governance architecture of this exchange is going to change, as well as the kind of risks that it has been taking growing up. And so that's bound to have a massive impact on the industry, given Binance's position in this industry at this present point in time. Now, obviously, as you know, Talia, Binance's trading volumes have been falling since 2020, since this last year. Approximately 60% of the spot market last year and approximately 40%, at present. So it's really lost market share since January of this year. But at the same time, its impact, its effect is undeniable for the marketplace. How it runs itself, the kind of products it puts out, the kind of governance norms that it espouses, these are all extremely significant for the influence that they have more broadly. If you recall, post-FTX, CZ and Binance have been trying to position themselves as kind of regulatory spokespersons for the industry as a whole. CZ, for example, announced a stabilization fund. They were talking about proof of reserves as a way to kind of provide some transparency into the exchange. So, these are things that Binance was trying to lead because of its dominant position in this marketplace. Now, what it's going to do going forward, how its governance norms, brand new, will be implemented in Binance 2.0, this is likely to have some impact for the structure of the industry more broadly with respect to things like risk management, governance, customer protection, and so forth.
Several industry insiders argue that the Binance settlement is a pivotal moment for the crypto industry. Some argue that it highlights the need for crypto exchanges to prioritize regulatory compliance and adhere to established financial laws and standards. Robert Lay, a crypto analyst with the research firm PitchBook, argues that the enforcement action could signal a broader shift towards stricter regulatory oversight in the crypto industry. Do you agree with that argument? What's your thesis?
Well, it changes the approach that many exchanges, particularly those offshore, have taken, which is to adhere to the principle that because they're offshore, that potentially they may be safe from criminal prosecution here in the U.S. Now, clearly, the Binance example has shown that that cannot be true, particularly in the case of AML AML and anti-money laundering and sanctions and compliance here. The U.S. is well known as having very powerful extraterritorial reach in this context, and that is something that has been demonstrated given that the Department of Justice has spectacularly brought Binance to heel in this context. So exchanges around the world, whether they're offshore, the kinds of businesses they're doing, the business, the people they're doing these businesses with, they're certainly going to be on notice here, and particularly founders that are working closely with respect to designing how the exchange is working, what the exchange is doing. These founders are on notice too, given the fact that CZ has pled guilty and is potentially looking at some jail time, though it's not clear exactly how that might work out. 18 months, it looks like, in the current plea agreement, but it can go up to as much as 10 years. So certainly there is a broad notice across the industry as a whole that the U.S. Is taking a kind of responsibility as a global policeman, particularly in this context of anti-money laundering and sanctions. So, that is certainly one thing. More broadly, of course, as Robert's pointing to, there needs to be some kind of clarity as to what exchanges also have to do with respect to compliance. So it's going back to our earlier conversation, Talia, here in the US, we need to work on a framework for oversight for exchanges, for standards like disclosure, risk management, customer protection. Once we have that in place, that provides a clear roadmap for exchanges to comply with. And globally, we also need to think about standards for international exchanges that are doing business in multiple jurisdictions. At present, we have a fragmentation of regimes around the globe. So we have the market in crypto assets regulation in the European markets, MiCA, Singapore is doing their thing, Canada's done its thing. So there's a fragmentation of regimes, but no international standard here. So one issue that we're all dealing with respect to thinking about how exchanges, get to be the gold standard for compliance and how they get to that point is actually having clear standards for them to comply with on a comprehensive basis to cover aspects like customer protection, disclosure, and risk management. And, certainly globally, we're not there yet. And certainly not here in the US, as we just discussed.
Now, Professor Yadav also discussed which region she thinks is winning the race as it pertains to crypto regulation. You'll be able to check out her full interview over at cnbc.com/cryptoworld. Okay, that's all for today, but we'll be back again tomorrow, and we'll see you then.